Hello everybody and welcome to Greenstar Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, we won't be looking at any of our usual assets today. We're going to be taking a look at the PCC and the VIX. Now, I'm having an easy week this week. It's the last week of the summer holiday and I'm enjoying it at home with family before my little girl goes back to school on Monday, at which point regular service will resume with 3 to 5 videos a week. And so I'm coming at you with something different today. A short video. We're just going to look at the put-to-call ratio from the Chicago Board of Options Exchange, and then we're going to go and have a look at the VIX as well. So we're going to start here on the PCC, the put-to-call ratio. Now you might be saying, Tom, this looks nothing like my chart on TradingView. Fair enough. That's probably because you've got the price turned on. Not the price, sorry. This is not a price chart, is it? You've got the data turned on, and if you've got it turned on, it looks a bit like this, which I'd argue is not particularly useful from an analytical point of view. So what I've done, and this is not necessarily in any way the right way of doing it, it's just my way of doing it. You can disagree completely if you want, but all I've done is applied a couple of moving averages to all of that noise. One is a 250 exponential moving average and one is a 60 exponential moving average. The 60s in orange, the 250s in green. And then all I've done is I've basically observed where the highs roughly are, here, here, here. The most extreme readings, I mean this one's insane obviously, but the most extreme readings, and I put a green line along here and called it extreme fear / panic. Okay, and then I've done the same for the lows, here, here, and currently here, and I've called this extreme greed / complacency line in red. We also have two inner bounds, one here because of this, you can see, and this back test, and this support here, and this resistance, and the same with this resistance, these areas of resistance here, same with these here. So you can see I've got an inner bound, and I've got an outer bound, and I've got the two internals levels that I'm using as well. Right, so the one thing I've noticed about this is after we get a topping pattern or a bottoming pattern, take this one for example, a high to a higher high to a higher high to a lower high, we get a crossover of the short term average through the long term average. You know, we got one here, after coming back up we came back below it. We got one here, and we got one here, and we got one here, and it's not a perfect signal because there's no such thing as a perfect indicator, but what you notice after getting that is a move down, a move down, a move down, a move down, and a move down. And this just seems to be the case. So that average crossing the other average is a regular signal which has occurred several times, and this chart goes back to 2007. Now we see the same here when we get this kind of bottoming action. We have a crossover here, we have a move down, test, back, over, cross here, we have a move down, back, test, and then over with the cross here, and you know we get one here, and we just had one literally last month or in the last couple of months here. And what you see here is a big eruption up, gradual move up, gradual move up. Is this going to be a gradual move up, or is this going to be an eruption? Is it going to fail and continue to meander along here? That's also an option. I'm simply observing that for the first time since the move down into extreme greed and complacency levels through here, and this crossover was back here in May, since then we've stayed below that 250, and now just during the summer we've crossed back above it. Now if we just zoom in on the more recent history of these moving averages over here around where I've marked new lows, because we've never seen these lows before. Not in the history of this chart. So this is a new level of extreme greed and complacency. This is what shall we call this? We could call this the, you know, the AMC GME level of stupid extreme greed and complacency. Sorry, Freudian slip there. And we can see how we got a series of higher lows here, and also a series of higher highs. Right now, the markets have proven resilient beyond even the most extreme imagining, for me at least. They've just continued to push higher. Now I know I've been calling for a higher high into a primary free, and then we'll have a correction, and I've been saying we've got a little bit further to go, but I am still amazed by the resilience and the strength of the major indices. It's just phenomenal. I've never witnessed anything like it. So as an Elliotician, all I can do is count the chart as it comes to me. It's the same with my fib levels and my extensions and retracements and pitchforks and channels, and that means we're going to put numbers on the chart as we see them, and that's the best we can do. But it's been tricky on the major indices. Individual stocks, not a problem. A lot of cryptos, hasn't really been much of a problem, but the major indices have genuinely been a bit tricky. Okay, so I'm not going to get into the habit, or trying to avoid the habit, of constantly calling tops, because it's bloody annoying at the end of the day. So I'm not going to say it's a top. I'm just going to say be on guard. Okay, just be on your guard, because this in the past has meant bad news. Because obviously the put to call ratio and the history of these moving averages here is inversely correlated with the stock market. So if these move up, the stock market moves down. If these move down, the stock market moves up. Nice and simple. So there you go. I just thought I'd share that with you and hope you find it useful. Next thing I just want to take a minute to look at is the VIX. Now this is only going to take a minute. What we tend to see in the VIX are these compression phases. Compression normally in the form of a high and then a lower wedge forming to a low, or a descending wedge forming to that low. It's not a perfect wedge, so you get a high, and then what you tend to get from the you tend to get this kind of descending wedge pattern, right? Something like this. So you get a high here, and then you get this descending wedge, and this tends to be a theme over and over again. And we can see, much more recently we've had this one here. We've had this one here. These are all smaller ones, but they're all still little descending trend lines. And then we've also got this one here. We've had a high, and then we've got this kind of descending wedge shape again. It's just a frequent occurrence. Now, these are not in any way useful for predicting the collapse of the market, because if you keep observing this trend line down, and every time it comes back to it, you're like, oh, it's going to break, off we go. It can do it forever. I mean, well, not literally, but it feels like it if that's what you're waiting for. So there's just no point sitting here going, oh look, oh it's going to go, oh it's going to go, oh it's going to go, oh it's going to go. No, it can go on for a bloody long time. So I'm not suggesting that an imminent whoosh in the VIX is here. I'm just suggesting that with the data we've had in the put to call ratio, the averages I've used, you just got to be on guard. Because what I also have noticed is two areas of divergence here on the VIX. So we have a longer term trend which has been going on all the way from 2018, where the market initially started to break down in what we had the peak of cycle wave 3 on our SPX count. And we've just had a low, a higher low, higher low, higher low, higher low. This is a trend going back to 2008 of just the lower bound of volatility being on the rise the whole time, with these sudden spikes in between. And we can see on the shorter term here, we also have divergence between lower lows, higher lows in the VIX, low here, high low here, potential high low here with a little bounce, and what the stock market's doing, which is just a series of higher highs and higher lows. So just be on your guard, because you should be looking for, of course, a breakout of here. Let's just move this trend line to try and be a bit more accurate. Let's take in the peaks of these previous efforts. And if you continue to see, or if we continue to see the averages push higher in the put to call ratio with a breakout of the VIX, that will definitely symbolize a significant pullback in the stock market. It could be temporary before we set another range, or it could be something much more significant. So I'm not going to put a date on anything, so just have your eyes open. Alright then, I'm going to leave it there. Hope you find this video useful. If you're new to the channel and you like what you've seen today, please feel free to go back and look at all the other videos on my channel. I normally cover a series of the same assets each week, occasionally including new ones. And please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. feel free to leave us a comment in the comment section below. And as always, thank you very much to my Patreon subscribers. If you're interested in becoming a Patreon, it's the last day of the month as I speak to you at the moment, so the new month is the perfect time to do it, as you get charged the day you sign up and the first of each month thereafter. So make sure you sign up either late on the 1st of September so that you don't get caught out by time zone differences. I've seen it happen. Or just to be super safe and you want to sign up on the 2nd. You get a whole raft of benefits. You get a weekly exclusive video. If you go for the tier 3, you get the monthly dividend calendar and stock rating system. Tier 2 will also give you access to the Discord. It will give you access to all of my educational materials, which is my Elliott Wave series, trading series, psychology videos, also my trade setup system that I use, charting tools, the lot. The Discord itself is a great, very useful asset as well, and also you get monthly deep dive videos which I provide as well. So there's a whole raft of things that you could be interested in, so feel free to follow the link in the description below, have a read of it is, but remember, best to sign up on late on the 1st of the month, or at least or perhaps on the 2nd, just to avoid getting double charged. I would of course refund you if that happened, but just letting you know in advance. Now, if you're not following me on Twitter yet either, there's a link in the description box below also. Alright guys, take care of yourselves. If I find time during this last week of a holiday, I will try and get another video out to you before the weekend. But if not, it will be next week. So all the best, take care, and I'll be back with you guys soon. Bye bye.